Hi everyone, let's have a look at my preferred bullish and bearish macro and high time frame Elliott Wave scenarios on Bitcoin, and I will also show you a couple of unlikely scenarios at the end and explain to you why that is the case. So let's start with my macro bullish scenario where I'm looking for a wave 1, 2, 3, 4 and then a wave 5 to the upside with targets most commonly between 98k and 174k, as the most common target for a wave 4 is in between the 1.236 and the 1.618 taken from the high of 3 to the low of this wave 4. If we then look at this wave 4 over here, we're looking at a WXYXZ scenario, which is rare, but it is possible in a wave 4 as a complex correction. It bounced perfectly on the 0.5 fib taken from the low of 2 to the high of 3, and the weak low of this wave 4 was also made on the 0.618 fib time taken from the low of 2 to the high of 3 as well. If we then open the volume, you can see that we also had a volume peak at the lows of this wave 4, which can signal a reversal area for eventually more upside, just like it did with this wave 2 over here. You can see the impulse of wave 1 and you can see the volume in this impulse as well. But then the low of this wave 2, which actually was the COVID dump, by the way, over here, you can see we had an incredible amount of volume in this COVID dump candle for then eventually a big move to the upside. So even though this was the COVID dump for me in an Elliott Wave point of view, this was simply a wave 2. Now we had two potential trading setups over here on the chart, of which one is still a potential, I suppose, which is the second one over here, because the first one, well, that was basically entering longs just above the 0.5, because if this is a wave 4, then high time frame candles are not allowed to close below the 0.5, so the stop loss was then somewhere safely below, trading it to the upside, and of course by now stop loss should be at least break even from an Elliott Wave point of view. And the more safer option, I suppose, is that when you get these retracements, longs can be like positioned in the chart, like you have long position, stop loss then below the low of this wave 4. That is the invalidation for then a potential long swing trade to the upside in a wave 5. If we then go to the bearish scenario, it looks a little bit more cluttery on my chart, I suppose, but I will guide you through my complex chart over here. And this one is actually, it's pretty sick scenario actually. So we have wave 1, 2, then this is wave 3 ending over here. This is wave 4, and then this is wave 5. Now what I don't necessarily like is that this wave 4 is so short in time compared to this longer wave 2 in time. Usually a wave 4 takes more time than a wave 2, but in this scenario that is not the case. So then we have the high of a 5-wave move impulse over here, 1, 2, 3, 4, 5, and we are now in an A, B, C correction to the downside, which is a zigzag. It's a 5, 3, 5 move, 1, 2, 3, 4, 5, followed then by a 3-wave correction before another 5-wave move to the downside. Now in this scenario, one should note that this wave 3 over here, in this being a 1, 2, 3, 4, 5, this wave 3 did not reach the usually more common target of at least the 1.618 fib, as you can see. Price turned around between the 1-to-1 and the 1.618 trend-based fib extension, taken from the high of 5 to the low of 1 to the high of wave 2. However, the minimum requirement for an impulsive structure is that this wave 3 is not allowed to be the shortest wave. And as you can see, because this is a trend-based fib extension from the length of wave 1, wave 3 is longer than wave 1, so at least it is valid. Now in this particular scenario, this 5-wave structure is then the low of a wave A, and we are now in a 3-wave corrective structure to the upside in a wave B. Now from a time perspective, this wave B might soon already be in. Why? Well, if we look at the weekly candles, right, we're on the weekly time frame, and we have a look at the fib time, the 0.382 that you see at the bottom. This is the 0.382, or at least the fib time that you see is taken from the high over here, the all-time high, to the low. And the wave B, well, for me, minimum like should be at least a 382 fib time, but it already reached the 382 fib time. So potentially this could be the end of a wave B before then the C to the downside. However, I think it would be nicer to actually find a bit more upside and also have a more clear structure on the weekly time frame, like a more clear 3-wave structure, right? You have a clear then 5-wave structure over here, and I like to see a clear structure 3 waves in then a wave B. Now if we look at the resistance areas, I think this is quite a nice area for the end of a potential wave A over here, which then also is a 5-wave impulsive move to the upside. Why? Well, we have the big range value area low over here, which is the range like over a year range over here. And we have a big support resistance area. So this white box was support over here. Then we broke through, and now it can act as very nice resistance. So I think that would be very, very nice for then eventually a move to the downside in a wave B, which then should be a 3-wave structure to the downside, for then eventually another impulsive move to the upside for a wave C. So we're then talking about a zigzag, which is a 5-3-5 wave move, for then eventually the end of this wave B. And the reason that I have a white box between the golden pocket and the 786 over here is because this will definitely be the area I'm looking for a potential bearish scenario to the downside. We of course have to wait and see how price develops, if bullish or bearish is going to have more probability, but this is definitely an attractive resistance area. Why? Well, first of all, we have the golden pocket and the 786, which is a common target for a wave B taken from the high of 5 to the low over here. But more importantly, we also have the point of control of this range over here. And the point of control is the area where the most volume has been traded in this massive over a year range. So this is incredibly important resistance, and it also happens to have confluence exactly with the golden pocket over here. And if we then look at the 786, the 786 has confluence with the value area high of this range. So also the 786 has incredible resistance, and the golden pocket has incredible resistance in confluence with each other. So this area is very, very interesting for then a potential short, stop loss somewhere safely above and looking for a swing to the downside, where yes, we have very big resistance, but we also have incredible support here to the downside. So if we then move our eyes to the downside over here, let me adjust the screen, then we have great support in the most common target area for a wave C, which is between the 1 and the 1.236, estimated for price reaching around the 786 level, because you take it with the trend-based fib extension from the high of 5 to the low of A to then an estimation of where the high of B might be. So currently I estimated it around the 786 over here, and then it gives you this target area, this white box over here for the end of a potential wave C, at least the most common target for a wave C. But what is important is that this white box over here has great confluence with the golden pocket taken from the low of 2018 over here all the way to the all-time high. Massive support, this golden pocket. And not only that, we also have this multi-year volume profile range, and the value area high of this multi-year volume profile range is exactly crossing in the middle of this golden pocket and the most common target area for a wave C. So massive support over here in this area, which is basically between 7.9k or basically 8k to 11.4k. So that is definitely an area to look for if we're going to play into this bearish scenario. We have incredible resistance, but we also have incredible support. So if we then go to the bullish scenario on the daily time frame, which is then a follow-up from the macro, right, where we're looking for a move to the upside, looking for that basically 100k Bitcoin, like the moon is basically the next target, right? We have to switch to the daily time frame. And the daily time frame over here is a little bit more complex, and it also has to do again with this being very, very vertical and now ranging already for a very long time. We're basically going sideways already for many weeks, even a couple of months by now. So if we look at this structure, what I'm looking for at the moment is this being an extended wave 1 in a 1, 2, 3, 4, 5, so a 5-wave structure in an extended wave 1, followed then by a wave 2, which then has an impulsive wave 3. Now a wave 3, if wave 1 is extended, so if wave 1 is extended, wave 3 does not have a target. So that's important, right? Wave 3 doesn't have a target, so there's no fibs on my chart over here. But wave 4 does have a target. And the most common target for a wave 4, if a wave 1 is extended, is between the 0.236 and the 0.382 Fibonacci, taken from the low of 2 to the high of 3, which currently sits between 26.4k and 24.9k. So this area is very, very important. And what is also important is the overlap that you might get with wave 1, which is not something you like to see if we're thinking about an impulse. So the 382 should not be reached. This is then a 1, 2, 3. Then we want a sideways 4, reaching the 0.236, maybe dipping below and then move up. You don't want to see price hitting this key level at 25.3k, as then this scenario becomes invalidated and maybe a diagonal becomes more likely, but that is one of my unlikely scenarios, which I will show you later. So I'll explain why that is unlikely. So basically what I'm looking for is eventually this being like a complex structure in a wave 4, right? Like eventually we're looking for a 3-wave structure where I'm looking for the 0.236 as a very interesting area of support, not dipping into the 25.3k. If price does reach that level, then eventually it is invalidated and we have to think of other scenarios, which I have, but are not relevant at the moment for where price is right now. And after this wave 4, we are then looking for a wave 5 to the upside. And I really think that these highs over here, which is the range of 2022, these highs, very attractive for potentially then the high of a wave 5 before then reversal to the downside in a bigger wave 2, because we're in the bullish scenario. So we are thinking of this 5-wave structure being part of a wave 1, then we get a very big wave 2 to the downside before then a massive 3 all the way to the moon. That's right. If we then go to the bearish scenario, which is a follow-up from the macro bearish scenario, so just to refresh your mind, let's quickly have a look at the bearish scenario on the macro once again. So this is the scenario we're looking for. So we're in wave A, right? Wave A, B, C. If we then go to the daily, it's basically the same scenario as the more like bullish scenario. Why? This can either be a wave 1 or a wave A, followed by a wave B or a wave 2, for then eventually a wave C or a wave 3. So bullish and bearish scenario is basically the same at the moment. However, how do you know if it's going to be a wave 2 or a wave B? Well, the targets are a little bit different, because if this is a wave 1 followed by a wave 2, the Fibonacci's that are most common for a wave 2 are between the 0.5 and the 0.786 Fibonacci, which is then taken from the low to then the high of wave 5, wherever that is going to be. And if you then put on the Fibs for wave 2, and actually put it on log scale because we're on a high time frame over here, you can see that the orange one, this, the 0.382, rare target, the 0.5 to the 786 are common targets, and the 886 is a rare target. However, if we talk about a wave B, you will see the colors, some of the colors will change. So a wave B and then a zigzag structure, and let me put on the Fib levels for log scale again. The most common targets for a wave B are basically almost like all the Fibs. Yes, the 0.5 to the 0.786 is more common, but for a wave B, it's perfectly normal to reach the 382 before eventually a bounce, or the 886 for eventually a bounce. And the 382 and the 886 are rare targets for a wave 2. So that is a little bit of an important golden nugget in my opinion. And if we then have this wave C to the upside, in this then being a 5-wave structure in a wave A, followed by then a 3-wave complex structure in a B, and then a wave C to the upside, the volume inside this wave C should be relatively similar to wave A, or maybe even less than wave A. But you don't want to see volume increasing, and you also don't want to see this wave C going more and more parabolic to the upside, because then it is more like a characteristic of a wave 3. Volume increasing, more parabolic structure, that is definitely more likely a wave 3. So this is the high time frame bearish scenario, which basically is kind of the same, looking for a dip down for eventually a wave 4, then a wave 5 to the upside, where again, the highs of the 2022 range are very attractive. So now I have a couple of unlikely scenarios for you, and I do think this is very important, guys, because why are some scenarios more or less likely? Well, let me explain a couple that I still see online sometimes. First of all, this one over here, where we then have a 1, 2, 3. Then we have an expanding flat in a wave 4, and then looking for a 5 to the upside. Now, even though the bullish scenario of this being an impulsive structure to the upside could be correct, and this could be indeed be a, like as I've shown, this could be the low of a wave 4 for then a 5 to the upside. So even though the outcome might be the same, the Elliott wave count of a wave 4 is incorrect. And I'll explain you why, because it has to do mainly with this wave over here, this being a wave C. So first of all, if this is the high of wave 3, we then have this as a 3-wave A, 3-wave B, and then a 5-wave move to the downside in a wave C. Now usually wave C is a relatively short impulsive move to the downside, and usually it is shorter than wave A or wave B. The reason why is that a wave A and a wave B are three-wave structures, corrective structures, while a wave C is an impulsive structure, which therefore usually takes less time to form. However, in this scenario, this wave C over here is 5 to 5.5 times longer in time compared to wave A and wave B, which is ridiculously long, and definitely that by itself would invalidate a wave C for me. However, that's not the only thing. This wave C is also very, very deep. So you can see we're on the weekly time frame. A couple of weekly candles over here have closed below the 1.618, which is a maximum target for a wave C, pulled then from the high over here to the low of A to the high of B. Or you can do another one, which is from the low of A to the high of B with the normal Fibonacci tool, and then you get this area over here. But you can see candles close below, which is very rare, and it kind of invalidates this scenario as well. So yeah, this is definitely not a nice scenario, but especially the time of this wave C for me invalidates this scenario, and time is important in Elliott Waves. Now, and I would say more or less, less likely scenario over here, which used to be in the past my preferred one, but is a 1, 2, 3, 4, 5, at least the preferred bearish one then, over here, so a 5-wave structure. And then we have this as a W, which is absolutely fine, works very nicely indeed. Then we have an X, and then we're looking for a 3-wave move down in Y. The reason that this became a less likely scenario is mainly because of this move over here. So if in wave X we have a 3-wave structure in an A, a B, and a C, which is an expanding flat, which absolutely works. The targets for this wave B have been very nicely respected, and then this should be a 5-wave move to the upside in a wave C. Well, the thing here is basically the same as the other scenario, that this wave C is now starting to take very, very long compared to this being a wave B and this being a wave A. And if we go to the daily time frame, and I show you the time, the Fib time basically, then you will see, like if this, let's put it on the chart, this is then wave A, this is then wave B, and then we have wave C to the upside, right? And if we then take the length of wave B, because you can see that wave B is longer in time than wave A. So if we take the Fibonacci time-based tool over here, the trend-based Fib time, we take it from the pivot high of A to then the low made of B, and we double click, you can see that this wave C is already longer than 1.618, so basically 168% of the time it took to develop wave B. So this wave C is starting to become a very, very long structure at the moment, which is not really something that I like to see in a wave C, as I explained with the other scenario, and therefore this scenario becomes more of a unlikely scenario. And if we then go to the high time frame one, the first scenario I like to talk about is a potential diagonal that is unlikely. So with a diagonal, you want to see converging trend lines, right? So you have the trend line at the top over here, and then the trend line at the bottom should be converging to the one at the top. That's what you want to see. The reason that this, however, becomes less likely is because in a diagonal, you actually want to see overlap. It's not necessarily, it's by far most common. There's a little bit of a discussion in Elliott Wave world if it is a must or not, but by far most commonly a wave 4, and that's actually just something to remember, wave 4 should overlap wave 1. But if it wants to overlap wave 1 and still be a diagonal, then you have a very small window of opportunity for price to dip down, because you can see on my chart a channel, which means the trend lines are the exact same and not converging. But you want to see in a diagonal, of course, you want to see the trend line converging. So the trend line should move from here to the upside. That's what you want. However, that also means that price has to dip inside this area to create overlap with wave 1, create a low over here, and then move up. And it has to be done relatively quickly, because if I put a vertical line on the week where we are right now, this over here is the window of opportunity for a diagonal in this particular scenario, which is incredibly short. So basically from where we are now, we have to dump all the way down, not hit this trend line over here, because then it invalidates a diagonal, because then you're just a channel, it's not a diagonal anymore. And yeah, it's very, very low probabilities, right, as you can see. So very small window of opportunity, very low probabilities that this is in some way a diagonal to the upside. So if we then go to my final unlikely scenario that I like to show you, it's the 1, 2, 1, 2. And the reason for that is basically because of this wave 2. So this is then a wave 1, 2, and then we have another 1, 2. And the reason mainly that for me this is a alternative, less likely scenario is because if this is the blue wave 1 and this is all part of the blue wave 2 and we are still inside this wave 2, it's taking a very long time, and this wave 2 is actually taking more time than the higher degree wave 2, because this green count is a higher degree count, with the blue count being the lower degree count, right? The 5 wave blue count is part of the bigger 3 count. 1, 2, 3, 4, 5 finishes the green 3, and then you have the green 4, and then eventually the green 5. That usually means that the wave 2 of the higher degree count is longer in time than the wave 2 of the lower degree count. But as you can see, if this is wave 1 and we're still in a corrective structure looking for downside, where the most common target for a wave 2 is between the 0.5 and the 0.786, we still have a long way to go to the downside, and it's just taking so much time. This range is already longer than this wave 2 structure over here, and basically because of that, it kind of invalidates for me a 1-2-1-2 scenario. So therefore, I think this scenario is not very likely, and this video was packed with information. I hope this video was helpful or valuable to you. Please check out the recent update. Actually, my ending screen here is wrong because we already just did the macro and high time frame update, but check out the most recent update if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.